Hello, traders out there in Traderland. D7 here with Grok Trade. This is the weekend edition video, and we have a number of things that we want to talk about. Let's buckle in. First thing I want to say is we're looking at technical analysis. We are looking at the S&P 500 chart. Last few days, Wednesday, Thursday, Friday, very turbulent. You can tell that we had these doji up here beginning of the week, and then we got very, very, very choppy up here. What looks to be near a high. This choppiness happened on bigger volume. It's not necessarily capitulation volume, but something to be paying special attention to. It's telling me that there is some um, um, uncertainties out there. If I take a look at the VIX, you'll notice the last week VIX has been marching higher. What does that mean? Fear is increasing dramatically right now. It's happening. And with that said, I want to go back to the S&P 500. I want to go back to the weekly. I want to show you a couple things, and I want you to feast your eyes on these. Let's go back to here and take a look at this. So when we're looking at the markets here, okay, when we're doing that, what we want to do is take a look at the weeklies and say, on the weeklies, do we have bearish divergences? Which we do. Now, with that said, we see a number of divergences on the weeklies. If I go to the diamonds, they're all over there. On if you look at the Qs, divergences. If you look at the Russell 2000 divergences, you just see them across the board. Major on the Russell 2000 or the financials rather. Okay, that is on those. Now we also have the months that are over. The months are very important that we look at these. The monthly chart, we went up, up, up on the spider. Do you see this? Up, 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 up. This has been a nice run to the upside on the monthly chart, multiple months going straight up. Diamonds, if you look at this, major resistance, multiple right up to resistance. If you look at the Qs monthly, you can see we're going up, 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 and we are seeing divergences on the monthly chart. Russell 2000 up, up, up at major resistance. You can see it here. Big divergences taking place. And look on the month how the Russell 2000 guys monthly went up and then came right back down. You see that? So in other words, resistance held. You see how we had a shadow up there, went way up, and then we crashed. Up here we had a little shadow, and then we dropped. Now we have a bigger shadow, and could we drop? It looks like we have a really good chance of that happening. Financials, you look at this, and financials usually lead the charge, and it already dropped. Do you see how everybody was up, but the financials were down for the first month, leading the charge to the downside. Now I'm going to pause here for a second. Guys, if I think that the smart individuals out there are fleeing to safety, and I think they've been doing it a long time. Because if I go here to gold, I can tell you already, gold, this is, if you look at this chart here, this is a monthly chart. So we are talking about gold being bought since March of 2024, 2024, and going into August, a significant buy the last 3 months. Now, if you go back to 2024, the beginning of 2024, and you're seeing gold being purchased this much, okay, this is telling. This is very, very, very interesting. Okay, if you go here to silver, you see the exact same thing. The big run started March of 24 and has marched up, up, up. Now, the reason I show this is because when you have fear in the markets, you have VIX going higher. Let's look at the VIX on the monthly chart. VIX has shot straight up, has come back down. And the question is now, did this blow a hole through the ceiling, and will we continue up? We have to watch this. Last time we blew a hole through it, we marched up the last 2 months, went up quite a bit on fear. Come down there, we blew a hole through it, we come down, but we pulled back several months. Now we did it again. But what's funny here is we hit support, 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 support. We did not hit support. That's telling me that has relative strength. It did not hit support. VIX did not hit that and rallied higher. And if this shoots up here, that means fear is spiking. Gold and silver has been spiking. That is proof that people are fleeing to safety. I think individuals out there sitting on their 401ks and IRAs that are hyper aggressive on the bull side need to reconsider. So let me be bold with you now, gang. Now, I've been trading in the live markets almost 30 years using technical analysis. Even some of my longest long fans have been with me the longest amount of time. Even the people who are students of the program have grown weary of my warnings of the markets going bearish, showing you these divergences on the monthlies and on the weeklies and on the dailies, because it has lasted for so long, and rising wedges can last forever. Divergences can last forever. The longer they are, the harder they fall. That is how you have to look at rising wedges, is that last forever. Those divergences that last forever just build strength. And here is the long and short of it, guys. The SOM rule triggered a year ago, August, that we're going into a recession. And then we had the longest and deepest bond yield inversion the history has ever witnessed. And then it has righted itself. And on top of those things, we have the Warren Buffett indicator that looks at U.S. stocks versus the U.S. GDP. And anytime it's at 200, it is high risk. It's at 223 right now. It's at 223. So it is significantly higher than 200. So that is telling me that there's massive risk out there that we are topping out. On top of that, Hindenburg Omen triggered October 17th. But if you get that, that doesn't mean to run through, to the hills. That doesn't mean to run scared, because you need to have two of them within 30 days for it to be pertinent at all, that data shows. Guess what? October 30th, just days ago, we got our second one. Instead of within 30 days, it happened within a week or two. So in other words, two Hindenburg omens hit us back to back very soon. And I don't care if people don't like me giving the warning that the markets could be topping out here. I care about you saving your money. I care about you not losing all the money you've worked so hard to obtain. I care about you not getting slapped upside the head because you were just ultra sucked into the bull movement and having the attitude that nothing can go wrong, because as long as you're in the markets, all is well. And you get drunk, you get intoxicated on the gains that you're gaining and not knowing when to safeguard yourself. So what do I care about? Your safety, you not getting hurt, you not getting smashed in the mouth, you not getting cut. That is what it's about. What it's about is capital preservation at this time. If you have a 401k, seriously be thinking about going to your investment advisor and saying, hey, maybe I need to go into the money market for a bit. I wouldn't be getting into gold and silver right now. Why? Because it's already had its big run. You should have got into that 2 years ago. That would have been the time to do it. But you would have missed out on the equity run. Equities have been doing great. Congrats. Don't lose this money. Don't give it back. So do yourself a big favor and let's sit on the fence. Let there be a 10%, a 20%, a 30%, a 40% drop in the markets, and then let's take all that money that you have saved and let's buy everything at a big fat discount and let's make some stupid money going straight north. How about we do that? Let's start thinking like intelligent, smart people opposed to broke people who's just fat and happy because of what their accounts are doing in the 401ks right now. What I'm saying, and you're hearing a real rant from me right now, because because the average person that's just getting started on YouTube or just getting started in the markets will bend the knee to public opinion on what's going on. I'm here to tell you, I've been here and have seen this a long time. I started in 98. A lot of you guys watching this not even been born, weren't even born in 98. In 98, I started trading. In 98, in 2002 years later, I'm only 24 months into my trading, and I get smacked with the technology bubble pop. I had to live through that. It's like living through a war and surviving through that and what you learn through that. A lot of you guys had parents or grandparents that lived through the Depression, and think about how they had stored up food and they would keep their money under a mattress. It's because what they went through. If you go through adversity, if you go through a hard time, you will change behaviors. You will be resilient to that lesson learned during that. And the average person out there will go with the flow of whatever the markets throw at them and hope and gamble for the best in the future. The markets go up more than it goes down. But when they go down, it takes the shares up. But when they go down, they jump out of the window to the downside. So it drops 66% faster to the downside than upside. And if you want to have your breath taken from you, be holding aggressively long when the markets fall out of bed. That will be when you won't open your quarterly statements anymore. You'll just sit on it and wait until the markets start to bounce back and you can start looking at your quarterly statements and getting excited again. Does it take patience? Does it take patience to sit on cash? It does. Does it take patience to only go bearish when there's confirmation to go bearish? Yes. Like one question we ask everybody before we even accept them as a student is, do you have discipline? And we have you give us an answer on why you think that you're disciplined. Give us an example that you're disciplined beyond the average person, that goes beyond the norm, not just brushing your teeth. Everyone brushes their teeth. What do you do that's disciplined to prove that you can be disciplined? What do you do to have strong emotional resolve? Like me, I have strong emotional resolve thinking that the markets keep marching and melting upwards. I'm okay with being in cash right now because I have lived through market corrections. And when they happen fast and furious. And capital preservation is key. Risk management is key. Money management is key. Those three things. That's why we spend hours on it. Then our mentorships to teach those things. If you learn those things and learn them well, you are going to be doing super well. Like I'll give you a little, I'll share this with you. One of the guys that works on our team, he's a team member of ours. I won't give you his name because it's not, but he says I could share this. So since I could share it publicly, I'll tell you his name is Andrew. But Andrew, he's a young guy. He put a couple grand in. He was using the principles.tim. He grew it to $20,000. And he was doing that, and it happened within 3 weeks, 2,000 to 20,000. That is not the norm. Don't expect because you go through our program that's going to happen to your account. Don't expect that. I'm telling you right now, he was just happy, giddy, and he's like, "Man, look at this account." He showed me his stuff. I'm so proud of you, Andrew, if you're watching this, which I know you will. So proud of you. Congrats on doing that. But the reason I bring that up is because of this. A lot of people that jump into this, and Andrew will not be this person, they get intoxicated on that. Greed comes in, that emotion of greed comes in. They over leverage, they underprotect. And by doing that, they give back their hard earned money very, very quickly because of that market intoxication. It happens, especially when you're making fat, stupid money. That is an amateur mistake. Andrew won't make that. It's not an amateur. He's been through the 301s, the 201, 301s, and 401s. And he's getting ready to go through the 401s again this next week. And so because of that, he's one that will make money and not give it all back. And I'll share another one with you. An individual, I won't share his name. This was years ago. Had a he grew a I gotta be careful what I share here, but I'll share this. So He stays anonymous. But this was an individual went through the program. He grew a $500,000 account to an $800,000 account. When he came back for a retake on mentoring, which are free, we sniffed out from him that he was way risking too much, not listening to what we teach on money management and risk management. And he came back to me in his $800,000 account. When he came back to me a number of months later because he was bleeding, he disclosed to me his account was 65,000, 800,000 down to 65 because of over leverage, greed coming in, and not adhering to principles that need to be adhered to preserve capital, making money responsibly, and protecting it once you have it. And my heart went out to him. He said, I did not follow the rules. I did not do what was told to me. And he took on the blame himself. He didn't wear a hat as a victim. Kudos to him for seeing what the problem is. I have another guy. I won't share his name. This is an individual that was gloating to me with all the money he was making. And then I'll tell you this, we have a trade log. People were sending trade logs and he was showing me his trade logs. And I saw major problems that he was having. And I said, you have to change this and this. Change. And he would send me another trade log. Change this and this. You're not listening to me. You haven't made those changes. And he wouldn't do it. And I knew that it was just a matter of time before he would lose his money. Guess what? His money went down. And all of a sudden, out of the blue, he told me, he gives me a call and he goes, Des, I put X percent. Well, he put 100%. I'll just tell you what it was 100% of the money he had, which was around $2,500. And he got in it, and that $2,500 got up to $40,000 because you know how it happened? I'll tell you. He held over earnings. And that earnings play was a monster move. And that gave a bunch of his money back. So he was so happy that he had all of his money come back, and he was thrilled on that. And all I could respond to is happy for your gains. I couldn't say great trading because one, he didn't trade, and two, he did not follow the rules. So it was a quandary. So individuals that are gamblers at heart should not be in the markets. They should not do it. If you are a gambler and you are in the markets, you will have your head handed to you by the rest of us. For you will have your head handed to you by the likes of Grok who are highly trained, highly educated, highly responsible in the markets, and they are in it to win it. I'm telling you this. If you are trading in the markets and not armed with the same level of skill sets, experience, and educational foundation, if you're not armed with that same amount, your chances of going head to head and winning are very slim. Just remember that. When you're looking at these hedge funds, and I own a hedge fund, I'm speaking from a lot of experience here. You go against these institutions. I'm not an institution or a family office. I am a hedge fund. I'm a quant fund. So if you're going head to head with us or them, I promise you this: your chances of winning head to head with us are far in a disadvantage. So can you change that? The answer is yes. All right, I'm done with my rant, but this is rant number 2 because I got some pushback on saying it's not a good look, Des. That's my real name. When you just keep saying, hey, bearish divergence, and it never breaks down. That's okay. If these bearish divergences go up another 2 months, guess what I'm going to be doing? Safeguard your money, safeguard your money, safeguard your money. Because I'm seeing everything's lined up. It's not just one thing that's warning. You can't get any more bearish. If I was going to say what is the most bearish setup you can give me, I would say not that the not I want the dailies giving me long-term bearish divergences. I want the weeklies on the same indices giving me long-term bearish divergences. I want the monthlies also. I want the monthlies, weeklies, and dailies all giving me bearish divergences. a full confluence across the board. Okay, I'd want that. Then I'd want the some rule triggering, saying, "Hey, we're going into a recession." Then I'd want a bond yield inversion, but not just any bond yield inversion. I'd want the deepest inversion and the longest lasting inversion that we've ever had in history. Oh, let's throw in the Warren Buffett indicator that says anything over 200 or 200 up to 200 is very risky, and we're at 223, which is extreme. And not only that, let's also throw in the Hindenburg omen. Not one, but let's go ahead and do two. Not in 30 days. Let's do it in 2 weeks so that we get two of them on the 17th and 30th. In other words, guys, I would say, and let me have multiple months in a row going up so we're RSI's overbought at the same time on a monthly chart, weekly chart. That's what I would do that. And guess what? All of those are in play. All of them are in play. So, would it be a good idea to protect your capital, do a flight to safety right now, and take a vacation, just relax for a while, and wait for the markets to bleed out? And if you're highly educated, let's make some money to the downside. Let's take advantage of that 66% velocity to the downside and make some good money if and when it happens. How's that? That sounds like a good plan, does it? Come on. Well, I hope you're okay and resilient to the rant that I just went on. And if I smacked you on the hands a little bit, hopefully you understand I'm doing it with a humble heart and I'm doing it for the betterment of you and you not getting hurt. And if you think that I should just go kick rocks, I'm okay with that too. I've got broad shoulders. You can't be out here in the YouTube space and not have broad shoulders. It's just part of the game. But what I do is I can tell you this: I respect you. I even can say I love you, whatever that means. I say that because I've been doing these training videos since 2004. YouTube didn't even come out until 2005, and no one knew about them until 2007. So, in other words, I was doing training videos before the world woke up to doing training videos online. So I've been doing it a long time. Some people say I'm no G at it, but because I don't market, I only got 13,000 followers on YouTube opposed to 1.3 million. If I marketed, we could be at 100,000 really, really fast, but we don't have to market. People come to us, through recommendations, which is great and fine. We're just here to help people that find us and want help and be taught by real traders. And um, we get a lot of engineers that come through, and for whatever reason, a lot of females are coming through now. Usually it's 90% male, 10% female. Now, the females are more like 90% females, 10% males. I don't know what changed, but a lot of females are business owners. Not all of them, but most of them are, which is fascinating to see. So I have no idea why we're seeing the big change from male to females. I don't know, but it is fascinating to see. We love everybody that wants to learn. So take care, guys. If you want, feel free to give me a like. Doesn't cost you anything. Take care.